Welcome back to Switzer on Australia's Business Channel. With a spotlight firmly on Europe at the moment and Greece's debt woes in particular, other regions might not be getting the attention they deserve. So tonight we're taking a look at Asian markets on a regional and country-specific basis. Kerry Series is a Chief Investment Officer for 8IP, a boutique fund manager focusing on high-conviction investment throughout the region. He's also the co-founder of Perennial and more recently ran Asia-Pacific Equities for AMP. Kerry, thanks for joining us.
Peter.
High conviction. I'm sure a lot of my viewers don't understand what you mean. What do you mean by high conviction?
Well, high conviction when it comes to our portfolios means that we invest in a relatively small number of companies. So we hold 16 stocks in our fund that we call the Asia Pacific Partners Fund that's offered here in Australia to investors.
Yeah.
That's pretty high conviction.
Yeah. And if you have 50, that's a lower conviction, isn't it?
Correct.
You really believe in these stocks.
Correct. I mean, there are 21,000 listed companies across the Asia Pacific region. 46% of all of the world's companies are listed in Asia Pacific. Out of that list of 21,000 companies, we've bought 16 for the Partners Fund. So you have to have a lot of confidence, do a lot of research into those companies before you buy them.
Tell us about 8IP.
So 8 Investment Partners, which we call 8IP, was started...
The real name is Investment Partners, but insiders call it 8IP.
Insiders, 8IP, was started at the beginning of last year. We're backed by a large South African financial services company called Sanlam through a division called Sanlam International Investment Partners. And they have equity holdings in specialist fund managers around the world.
They're like a fund-to-fund type manager?
So they've invested in a range of specialist fund managers.
And you're one of them.
And we're one of them. We're the one for Asia Pacific Equities. So we manage about $250 million on their behalf. We've built a team. We've got 11 people in the investment team. And then in Australia, we offer the Partners Fund, which is the high conviction.
So are normal people able to get into this fund of yours?
Most normal people.
How much money do you need to play?
In fact, we hope our investors are normal. So the minimum investment is $50,000. So it's not a mass retail fund, but the minimum investment is $50,000. There's a PDS, so it is a registered investment management scheme.
So what are you seeing in Asia now? A lot of people are really nervous about investing in stocks at the moment, and stock markets are justifying their spookness. What are you feeling now about stocks, and particularly your Asian stocks?
So our view has been, my view since early 2009 has been that we're in a new equity bull market, a multi-year equity bull market, and I expect Asia to be at the centre of that bull market. The key drivers behind the bull market are reasonable valuations. In fact, post this sell-off, we're back into the lower half of the valuation range in Asian equities. Good growth with good profitability. So we look at a measure called return on equity, net profits divided by the equity share that we own. That's risen to sort of 13-14% in Asia. That's an attractive level of profitability.
Yes, certainly.
And then the fact that a lot of people, I think, are still on the sidelines, holding cash, nervous about markets. And there's a great quote from the late Sir John Templeton, which was that bull markets are born in pessimism, grow in scepticism, mature in optimism, and die in euphoria. And I think we're in scepticism. There's a lot to worry about. There's a lot to worry about.
But it's interesting. I'm always looking for justification for my innate optimism. But I have been describing this year as cautious optimism, because I thought the reasons to invest are strong, but I didn't think the market would be happy to run along, and that's why you're saying it's an age of scepticism. What are the risks? Obviously, you must think the risks are reasonably small, and if so, why are they reasonably small?
Well, I think we all know the risks. So I think it is the old adage of this bull market is climbing the wall of worry, and there's plenty of worry about. And you've talked about the issues that are facing
Greece in particular,
the markets right now. My argument is, I'm sort of back to that adage, to Templeton's quote, is we know those things. They are discounted in the valuations. That's the reason most investors are scared of investing in equities. And you need to buy equities when valuations are low and sell them when they're high, which always sounds easy when you say it.
Contrarian, isn't it? Yeah.
But it is contrarian because valuations are low when the news is bad. And so it's very hard to invest at those points in time. I'd argue there's plenty of bad news around, but valuations are good. If you're a long-term investor, and that's what we do at 8 Investment Partners, you buy when valuations are reasonable or cheap, profitability is good, and you hold through the volatility
So you're
of
long
markets.
only? You're long only?
The fund at the moment is long only. That partly reflects our bullishness on the markets. Our intention is to bring the ability to short into the fund.
But that would be after you believe that the cycle's had a strong run-up.
Correct.
Yeah.
I don't see the great opportunities at the moment are in shorting. I think the great opportunities are in going long. But later in the cycle, when valuations get more expensive, when we're in the optimist or even the euphoria part of the cycle, then having shorting in your kit bag, I think, will be very valuable.
How confident are you about the information you get from Chinese companies? I presume South Korea has been measured for a long time. It's far more reliable. Japan, of course. Are you investing in Japan, or is Japan a bit of a worry to you? There's 3 questions there.
There's a lot of questions there, Peter.
Let's start with China. Are you worried about the calibre of the information you get from a Chinese company?
Well, so first of all, I get asked that question a lot.
Yeah.
So there's clearly a lot of people worried about that issue, and again, I think it's reflected in valuations to some degree. The way we deal with it at 8 Investment Partners is we meet with the companies. We talk to over 60 companies across the region every single month. We have people based in India, in Hong Kong. 60
new ones, or the ones that you actually, the 18 you've got, plus any 42 that could be in there?
The answer is both.
Yeah,
so we're talking to companies we're already invested in, we're always on the lookout for new ones, and we're trying to cross-check. So I think the important part about information from China or anywhere in Asia, in fact anywhere globally when you're investing, get the information from the source and then cross-check. And that's what we're trying to do with our high level of corporate activity.
Do you feel comfortable playing Asia? Because even if there is going to be a European issue, and remember when the last credit crunch was on, in a sense it was China that led the stimulation that gave the world its confidence again. Is that kind of like a secondary thinking that if something goes wrong, the Asians are more likely to stimulate because their balance sheets are in much better shape, both government and company-wise?
Well, I think that's right. Their balance sheets are in much better shape. I think capital is flowing to the region. But I guess my point is a bull market point, which is with this liquidity in the world, with this period ahead of us where economic growth is going to be tough in Europe and in the US, policy has to stay easy. Liquidity has to be created, and that money is going to seek out the higher return opportunities in the world. And I think those opportunities lie mainly in the Asia-Pacific region. So I just see a flow of capital. Trade account surpluses are bringing capital in, foreign direct investments bringing capital into the region. But in time, portfolio flows will come back to the region, and that's what will drive valuations higher.
Last question, and I know I won't ask you to name the 18 companies in there, but what are some of the names of the companies that you think are symbolic of the quality of Asian companies?
So we invest across the region and including in Australia. So we hold resource stocks and mining-related stocks in Australia in the portfolio, companies like Atlas Iron and Industria. And then in the region, a great example, 2 examples of companies we own. Huiyin Household Appliances, not a household name here.
No, but in China it is.
But it's effectively the household. It's the Harvey Norman of the lower tier cities. If you go to one of their stores, it looks like a normal consumer electronics store, servicing tier 3 and tier 4 cities. And OSIM, they manufacture massage chairs. They have vitamin pill stores in China.
And massage is big in China.
Big in China. So we're playing resources in Australia and consumption in Asia.
Yeah, fantastic, mate. Thanks for joining us on the program. I'll get you back in a few months' time.
Great.
That's excellent. Here on Switzer, we're counting down to the new financial year and a new challenge for Sky News Business.